Hey traders, Jeff coming back to you again on February 27th, 2025. I want to kind of give you a breakdown of what happened today in the markets and kind of relate to what we talked about last week, because we were talking about breaking a lot of those moving averages, the steep decline that we had, and that outcome usually is pretty grim. And so we'll take a few minutes, break that market down, show you what happened today and what the possibilities are on moving forward. Hang tight. All right, traders, let's take a look at the annihilation in the market today. Last week, if you remember, I was talking about this wide range bar a few days ago and what that meant, because we were breaking down from the supply area. Remember, we had triple topped up here, double topped at least. We broke through supply, so a lot of people thought about maybe this is the place to go forward. Maybe this is the place. And I even put out an email that, did you catch the supply run? And look what happened as you came back here and gapped down a little bit inside day. This day, as I mentioned on the previous video, pretty much broke through everything, right? Yeah, the 8-period moving average, multiple days, if not a couple of weeks, and close at the low. Notice, important key, how far do you bounce off the bottom? You can identify that by the tail here in the bottom of the SPY. This is the spiders. Broke through the 8, the 21, the 20, right through the new trend line in here, and it definitely caught traders off guard. So our comments were that typically on a posture of a bar like this, it doesn't break. You may go sideways for a while and then grind higher and then move back down, or maybe even move back up. Look what happened in here. But each time this happened in here, it was a different set of circumstances. We had gapped down and rallied. We had gapped down and rallied, right? We had gapped down and then rallied again and again. This was different. We opened up here, didn't see any daylight to the upside, and immediately started selling off and did not lift, even at the end of the day, maybe 30, 40 cents. Normally, as I mentioned, I'm going to mention the video here, we gapped up into that market and then we moved down. We did try to go higher for the first 30 minutes of the market, didn't take out the 30-minute high, and then actually sold off again right through the 50-period moving average at that point. And then we happened again, open flat, tried again. This time we bounced back off this level of support here. This was that breakdown support level. We drew the trend line. Participants got a little bit excited about this. There were some earnings out here to help that. Then we came out with basically a long-legged doji in here. But look what's happening here. We were bouncing off the lower level. We were bouncing off this 50-period moving average, or this new resistance line in here. And that's indicative to $9 to $10 runs in the SPY, which is not normal for a 19 VIX of 18 VIX at the time. And then today, before the last hour, actually exactly at 2 o'clock, we were doing the same. We actually are moving back up in here to 95, 96. Had a nice tail from earlier. It looked like they were trying to get a grip on the market going higher. And then lo and behold, right here on the 5-minute chart, you can look at it at 2 o'clock, and I mean on the nose, right there. Actually, a better shot on the 2-minute chart. Right there, that 2-minute chart was exactly at 2 o'clock, as you can see. Let me move my cursor up here at the top left, and that did not lift. And a lot of times in a bullish market, these little wide-range igniting bars in the afternoon at reversal times, a lot of times they'll come back into that. But in a bearish market, they don't. Well, it acted like very much a bearish market tone today. And you can see from that high at 2 o'clock at 594.52, we dropped from that high down to the low here at 584 and change, so at 50. So it's basically about a $9 drop. All in, though, we were definitely up, probably in one of the largest range bars that I've seen. This bar here was about 15 bucks top to bottom, maybe 16 bucks. We were all of that today. We were 598 being the high of the bar, down to 594. So we were about, once again, 14, 15. We were then probably $1 of that bar. This happened one other time over here, but there's not too many days in an 18, 19 VIX that you're going to see the SPY drop that profusely. Better yet, not bounce off the bottom. So where do we go from here? That's what people really want to know. And I drew the Fibonacci line from that original kind of head fake breakout down to today's close, or the low here at the bottom in here, just to identify some trend line or some Fibonacci lines where we might go. So usually after a big day like this, just like we did in here, we gap up. Look what happened over here. We gapped up. Now, the question is this going to be a dead cat bounce, Are we going to be able to not be able to hold it, take out the 30-minute high but fail, or not even take out the 30-minute high and continue down lower? So we are probably going to gap up here. We'll take a look at the market here, post-market in a few minutes. Gap up here. If we run here, we could run back to 591.5. Okay, that's about 50% of the move. That's about a $6 upward move. Now, a lot of this is not necessarily people getting excited about going long in the market. It's a combination of people trying to scalp the bottom here, get some upward move, more intraday cycles, just more short-term expirations if they're doing options, and a product of short covering. So that will typically move the market up. And then what's going to happen is we'll probably come back somewhere in this area between $4 and $5 up if it doesn't gap there already. And then it's either going to pull down here or back up here. It's either going to be a lower high or a higher low. And then it's going to make a decision. Is it going to try to reboot and come back up in here? Or is it going to come back down and retest this area here? Those are the only options. And this is what it will do. My best guess is, because we are coming down to a pretty major support area here, here, and then of course kind of a flag support area in here. And after an extended market down here, my best guess is that we'll probably move back up, come back down, shop around, head fake higher a couple times. It's not just going to re-bottom and go back to the top, and then we'll see where it kind of goes from here. So again, be mindful that we are at support area in here, but I also have a couple other things I want to point out. If for some reason we do begin to work our way back up here, this is a tremendous, a huge supply area right up at the top of that red. So be mindful, if we do get back up in here, and I don't suspect we're going to engulf this here unless there's just some outrageous news that comes in. Supply lives right here. Don't get too ambitious. It will knock the stock right back down, or this index right back down. It's going to take a lot to get through this. It's going to test it several times before it makes that higher, if we even get here, okay? So my best guess is we do gap up in the morning here. We settle in here somewhere between this mid-third to half-third of this drop, of this move down to this 23.6 total drop down here, somewhere in here. Chop around. We may revisit the bottom here, right? But stay somewhere in here. It's going to get choppy in here. And then we'll kind of know better once we kind of see what the candlesticks say. Now, we did do this on pretty large volume, as we did in here as well. But again, wide range bars that ignite leave supply behind. Look at this gap in here, did almost the same thing. Now, this was a support area, more pivot support, came through it, tried to react to that, came through it again to a larger level of support in here. So I think we have a better chance of bouncing off. Now, news is negative. If that's what it is, the Chinese tariffs today kind of came into play. Market does not like tariffs. It gets over it, but initially it does not. It basically sells now, asks questions later, and because of the inflationary aspect that might cause. So you can see kind of where we are in the markets here. Let's take a look at where the post market here after the market closed. As I mentioned in here, I'm going to bring this down and show you a different viewpoint of this. You can see we're already bouncing off the lows down here in post-market. We're at 584.90. Let's say we close around there. We're already at 586.15, so we're about $1.25, $1.30 up in the SPY. In the Qs, however, let's take a look at where we are in the NASDAQ. And you can see we're already getting a pretty substantial bounce in here, the low being 499.70. We're already back to 501.98. So what I'm drawing out to you here is going to happen, and you can kind of already see it happen right now. The market gets so, screaming sold off in here, it can't help itself. Fear and greed takes over, people trying to scalp that bottom. Don't get too excited, like I said, this being a tremendous upside, but it is going to go up a little bit here. Typically, it's just, I don't know if it's going to live up here. So be careful in the coming days. I'll update you kind of where we go, but you have a pretty good forecast of where I believe the market's going to go in the next 1 to 3 days. And then we'll come back here and see where they actually happened in the market in here. We also have some really good plays today, a couple really good plays, or one specifically in the day trade here. I'm not going to belabor that here. I'll do that on a separate recording. So thanks again, Jeff Yates at Full Throttle Traders. Remember, we trade what we see, not what we think. Have a good day. Catch you next time.